One of the biggest corporate controversies involving the Adani Group may finally be nearing its end. The US Department of Justice has reportedly agreed to close its investigation linked to overseas bribery allegations involving Adani Enterprises through a massive settlement worth $275 million. But what exactly was the case? Why was the Adani Group under the scanner in the United States, and why is the matter ending now? Well, the story dates back to the aggressive global expansion of the Adani Group over the last decade. Now, as the conglomerate expanded into energy, infrastructure and international fundraising, several US-based investors and institutions became financially linked to Adani companies through bonds and investment products traded globally. Now, the controversy escalated after allegations emerged that certain Adani-linked entities may have been involved in improper payments and misleading disclosures connected to overseas business dealings. Now, since some fundraising instruments touched American financial markets and involved US investors, the matter drew the attention of the US Department of Justice, the DOJ, as well as the Securities and Exchange Commission. Now, the US authorities were essentially examining whether American anti-corruption and securities laws may have been violated by the Adani entities. Well, the investigation gained over more global attention after the explosive 2023 report by short seller Hindenburg Research, which accused the Adani Group of stock manipulation and accounting irregularities. Well, the Adani Group repeatedly denied all allegations, calling them baseless and politically motivated. Now, despite the denials, the investigations created major turbulence. Adani stocks crashed sharply at one point, wiping out billions in market value. International investors became cautious, and several planned deals and fundraising exercises faced pressure. But over the last 2 years, the group slowly rebuilt investor confidence. Adani companies reduced debt, attracted new global investors, improved disclosures, and continued expanding across sectors like renewable energy, ports, airports, as well as data centers. Now comes the latest development. According to reports, the US Department of Justice has decided to close the matter through a settlement valued at roughly $275 million. Now, importantly, such settlements in the US do not always amount to an admission of wrongdoing. In many high-profile corporate cases, companies choose to settle investigations financially to avoid years of litigation, regulatory uncertainty, as well as reputational damage. Now, for the Adani Group, the closure is significant because it removes a major global overhang that had affected investor sentiment in the company since 2023. Now, for India Inc. as a whole, the development is also being seen as a test case in how Indian conglomerates navigate international scrutiny as they become increasingly global in scale and financing. Now, the settlement may not completely erase the political and corporate debate around the Adani Group, but it does mark a potentially decisive end to one of the most closely watched corporate investigations involving an Indian business empire. So while questions and political battles around the Adani Group may continue, the closure of the US DOJ case could become a turning point for the conglomerate's global ambitions and investor confidence going forward.